Hi guys, 13 July, Thursday, MAO with Kel once again, right? Book all your long position. Suspect CPI data may flip next month. Now, this is my caption for today. I know by saying this, I'm going to get hammered again. But the thing is, I want to tell you the truth here because I believe that next month CPI data may not be as pretty as this time around. I'll tell you more in detail. So book your long position out. Consider do that because we have made a bit of money, right? So take the profit and go because I suspect that US crude oil may go higher. All right, so disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. All right, so what is happening right now? Can take a look here, bye. Wow, it seems that things is changing. Don't you feel that way? Well, let's take a look. You can see that. You see a moment. Some technical error on my side here at the moment right now. Okay. So first of all, right, you can feel that something have changed, like the dark cloud disappearing. Right, the treasury yields basically goes less lengthy after the June CPI. So the thing is this, is it because that now inflation is curbed? Well, apparently, if you look at the data, it shows that, right, the food prices is going down, okay, in a way. All right, so people are looking at that. But the thing is that if you look at it, food and beverage, but shelter price is still at the high level. And this is something not comfortable to a lot of people. So the thing is this, yes, maybe the food prices came out a little bit, but it's not going to serve justice to the current situation. So we look at the market right now, the Dow Jones is up by only 86 points. At one stage, it was up by almost 300 points. That's something that you must understand. The Nasdaq is up because now with the Federal Reserve may not increase interest rate in a way. So that's why all the technology companies go crazy. All right, Amazon 1.5% up. Google up by 1.5%, Meta up by 3.7%, Nvidia 3.53%, Apple's almost 1%, and Microsoft 1.42%. So when the FANGs are all moving in and they are so strong, obviously the Nasdaq will be performing. But can this actually continue? Now I have my reservation here. I'll show you more with details. So let's just take a look. So inflation rose only 0.2% in June, less than expected as consumer gets a break from the price increases. So excluding food and energy, the core CPI rose by 0.2 and 4.8 respectively. So the main driver was the soft grain, food prices decline, and the second-hand used car too. Now, airline price actually also helped to keep the inflation down. But what if the crude oil price goes up and shelter price continue to rise? This is a very big concern. That is where I'm actually looking at. So now the thing is this, yes, the number is going down, and you can see right now from a high of 9.1%, has went down to now about 3%. This is really incredible. So you're telling me it's all right, within less than a year, we have seen the the inflation down by 6%. Wow, okay, then how about Germany? How about UK? How about Europe? This is something that I cannot buy. So of course, nonetheless, the bears got killed, right? Unfortunately, we are long in the market, if you didn't notice that. Okay, so if you look at the CPI data right now, it's really amazing. It was 4% last month, and now it's 3%, down 1%. Now, this is a very alarming speed itself. Is it because that the inflation is being curbed, or is it because the recession is coming in? But look at it now, it's 9.1%. This is the high side when it was back here, 9.1%, and very dramatically, we see going down all the way to 3%. But of course, at the same time, the Federal Reserve had increased interest rate by 5%. So if you knock it off, we are about the same level, right? So the question is this, we are now very near to the 2%. Is the Federal Reserve going to really stop hiking interest rate? I think so, if the market really feel that way. But the US dollar really puked last night, really went all the way down. You can see that this is the Bloomberg dollar index itself. And is it time to buy? To me, yes, of course. Why do I say that? Now, remember yesterday I was telling you that most likely come out 3.1. So I'm a bit off. I say that it's 3 to 3.1. Okay, the thing is this right now, you can see over here, 3.1%. 3%, so we are around here. The market should be up by 0.5%, which indeed it did. And that was what the JP Morgan got it perfectly correct, 45% on the probability. And that's why, woohoo, first time, yeah, JP? All right, so I remember telling you the US dollar will likely fall further because of this. And I'm looking at 190 to be the first area to look out. But of course, the best area to buy will be 99.21. This is what I mentioned yesterday. If you try to work it back again, you can see my reason. So you can see the US dollar really came down, but it went lower than my expectation. It went down. The current price is 100.40. Now, this is a weekly chart, yes, I know. So it went below my level. So 190, we bought some already, and I'm looking to buy a little bit more at 99.21. Now, these are the levels I think is good to buy. Now, of course, you will say, "Kel, dollar is coming down. Why aren't you buying?" Now, because I still believe that the Federal Reserve will increase interest rate. Yes, maybe for the month of July it's confirmed, but I still think that the next month they'll still continue to do that because of this thing here. I'll tell you about the US crude oil. So if you look at it, right, I mentioned on my MAO that there's going to be a potential elephant trade for the Dow. We believe that if the Dow do break down, we may see some selling. And I mentioned what's the reason, but of course, at the same time, where we saw the S&P, we told you, we will share with our students, say that S&P is also elephant trade, but this time it's moving for the upside. So I mentioned that if the market breaks a certain technical point, the S&P will go higher, and indeed it went. So congratulations to those who followed in the TWB this community. So this is the reason why now the S&P fell for 5 days in a row, but my KSI, my big voice indicator, have been absorbing, have been buying and buying and buying. So we know that something is wrong. And of course, we saw our KRW turning to cyan. So we know that that means the market will go up. And truth be told, that was where we looked to buy 2 days ago. And of course, S&P really hit the technical point that we coach our students. So again, this shows that TWB not only on the bear side, we also do the bull side. And for those who make money, congratulations once again. All right, so those who have made money, yes, this is what we have done. I posted to you after the CPI data came out. Well done, guys, well done. All right, so the experts are getting very bullish right now. They're looking at 4,500 for the S&P 500. Now, where the S&P is right now, let's take a look at the S&P. Well, the S&P 500 right now is trading at 44.72. So we're not too far away from 4,500, all right? So, and the thing is this is Oxford Economics, and they believe that it could be happening soon. I think with 25 points to go, can't be too difficult. So let's look at the next FOMC meeting. You're 13 days away. So why am I bringing this? Because I want to show you the Fed funds probability numbers here, and then you bring your own decision from there itself. Okay, so let's take a look right now. Now on the 28th of July, it's a 92.4%. There's a rate hike, and this is like confirmed. Even though the CPI data was 3%, they expect continue the rate hike in the month of July. Okay, fine. The month of September, that get interesting. Apparently now 82% of people are saying that this will actually be a pause. I mean, no more hike in the month of September. In fact, yesterday, before the CPI was right, here was like basically having a hike is about 25 to 30%. Today dropped to 11. And of course, here in November, wow, this is incredible. November itself, right? They still expect the rate hike to be paused. And then, but interestingly, right, 21% says that maybe by November, we will hike again. So it seems that there's been an alternate movement, still 2 interest rate hike. So July hike, September don't, and November again. Okay, I don't think so. I think it'll be hike all the way under November. Let's see whether I'll be right, yeah? So that's the reason why I'm looking to buy the US dollar when the price is coming down. And of course, the main thing is this because of this, guys, the US crude oil. Now, let's take a look at US crude oil for a short moment and let's take a look. Let me just correct my PowerPoint for a moment. There's some PowerPoint issue here. Yeah, sometimes this thing do happen when I'm rushing a little bit. Okay, now, basically, right, you can see crude oil price have been coming down. We all knew that. But recently, when the crude oil, my KCX indicator tells me that it's going to be bottoming out soon, $67.32, the bottoming out sign. We see the market came down, tested it, rebounded, tested it, rebounded, tested it, rebounded. Then that was where I know the buying will come in. And with the KSI turning green and the KCX turning blue, turning black, and the KRWs become cyan, that was a perfect cocktail for buying. And truth be told, crude oil just keep on going up. Now, what is the scary part of this whole thing is that if you look at it now, if you draw a line across it, you will notice something phenomenal. That means that we are going back to the highest point since the start of May. Oh my God, May period, okay? Now, May period itself, right, is the highest point. Now we are back there and you realize that there's no hype about it itself, right? So what happened in May? Let's take a look at the US market back in May, shall we? All right, so bring you back in May. So we'll clear my screen a little bit here. Where's May? Okay, here we go. Now, this is month of May. The market really went up because when the crude oil price went up, right, you can see that the stock market also went up at the same time. So you may say, that's good news, right? Isn't it true? But the problem is, all right, after May, that was where the crude oil price plunged. So that's the reason why the stock market got into it. So the question is now, if the market is actually going back to the same point here, and what if the crude oil price goes higher? Would it be the inverse of this? Can you understand where I'm coming from? This is where my concerns right now. And that's the reason why I feel that the energy prices will go higher. And that means that there is a good chance that the next CPI data will go higher and the inflation fear will resume. You understand? So that's the reason why when I was bullish on gold, on crude oil, on China, all this was mentioned in that post video about 8 days ago. And I explained to you why I believe that crude oil will be going up. And here are my reasons. So the thing is this, now the mid of July seasonal pattern, this gets very interesting. This is of the Hirsch holding, which is a stock trader alignment.com. Now you notice that if the first half of the year for NASDAQ is very bullish, you will notice that the second half of the year, there will be some profit taking coming in. And this is something that you don't want to see if you are actually now in. And if you look at it right now, right, this is the seasonal trend of the last 7 years. And by now, in a couple of days, we are at the midpoint of the NASDAQ. And usually, if the thing really fulfilled, there will be selling, and this selling wave will not be small. So that's the reason why I'm kind of concerned right now, even though we saw the NASDAQ going up quite a fair bit last night. Because you look at it right now, the skew index, right, this is really incredible. The SDEX, Nation Skew Dex, right, is a measurement of the difference between the implied volume in the ATM versus the standard deviation OTM, all right, out of money and in the money, all right, options. It appears that the reflection is the risk appetite and the perceived tail risk. Now, all the way is all right. The S&P 500 and the SPEX, they move in tandem. But you can see now, right, they are now so far away from one another. So what is happening? Something is not correct. And when divergence do such a big difference, right, I kind of worry at the moment. And of course, right now, the systematic positioning of the US equity by the CTAs are very strong. So that's the reason why they are the one pumping and pumping and pumping. Remember when I said that when last 1 year ago, we mentioned that if the CTAs are buying, usually the stock market will recover, and it is happening right now. So of course, at this junction here, if you ask me, Kel, then isn't that conflicting what you say? Yes, but if everybody is congregating on the buy side, and if the markets are to sell, that means that someone is catching the CTAs. And of course, we all know that the boys love to catch the CDAs. So the high yield corporate bond ETF, the HYG, you can see that right now, all the way, they are very in line with each other in tandem. But recently, ever since the money being pumped in after the SVB crisis, you can see S&P go crazy, or the high yield corporate bond actually went flat. So the difference again is pretty high. And of course, if they go back to the same level, then of course the S&P 500 has to come back down to 4,000 points again. So that's the reason why I've been saying this, guys. If you want to go and enter the market, you can continue to do that. But seriously, for me itself, I will run you take some profit because we went long on the right time. It's time to take your profit and go because the divergence itself is really a little bit too big. All right, that'll be all for today. Take care, like, subscribe, and share with your friends. It's Kel signing off. Bye-bye.